Hello and welcome. Today, we're basically becoming corporate detectives. Our mission? To demystify one of the most intimidating documents out there, the annual report. And we're going to use the 2024 report from TVS Motor Company as our guide to unlock all of its secrets.
You know, every public company has to publish one of these each year, and yeah, they're usually packed with numbers, jargon, and super dense tables. But hidden inside all that complexity is the real story of a company's performance, its health, and its strategy. So, are you ready to learn the code? Let's dive in.
All right, the best way to tackle an annual report is to stop thinking of it as a book you have to read from cover to cover. Instead, think of it like a patient's chart. We're about to perform a full corporate health checkup. Exactly. This document is our diagnostic tool. It's going to tell us about the company's vital signs, its overall structure, and whether it has a clean bill of health from the experts. And just like any good checkup, the very first thing we do is check for credibility.
So before we can trust a single number in this report, we need a second opinion from an independent specialist. In the business world, that's the external auditor. Their entire job is to verify everything.
This is honestly the first place I always look in an annual report. The auditor's report is basically a stamp of approval. It tells you whether an outside, unbiased accounting firm has gone through the company's books and agrees that, yep, the numbers are presented fairly.
And this right here, this is the money phrase. This is exactly what you're looking for. When the auditors, in this case Sundaram and Srinivasan, say the financial statements give a true and fair view, it's pretty much the corporate equivalent of a doctor saying the patient's test results are accurate.
So the crucial takeaway here is this. Without that green light, every other number in the report is, well, questionable. But with it, we can move forward with confidence, knowing the data is solid. The auditors also point out the specific areas they looked at most closely.
And that brings us to what the doctors were most concerned about. These are called the key audit matters. Basically, these are the most complex or high-risk areas where the auditors really had to use their professional judgment.
So for TBS, the auditors paid extra special attention to how the company handled its government grants, how it valued its big investments in other companies, and how it dealt with some uncertain tax situations. Now, this doesn't mean there's a problem. It just tells us where the most complicated accounting work happened.
All right, now that we've established trust, we can get to the good stuff, checking the company's vitals. We're heading over to the statement of profit and loss. You might also hear it called the income statement, which tells us exactly how the company did financially over the past year.
And here's our first big number. Revenue. TVS Motor brought in nearly 32,000 crore rupees. This is what we call the top line. It's all the money that came in the door from sales before a single cost is taken out. Think of it as the patient's overall activity level. But of course, that's not what the company gets to keep.
After all the costs, all the expenses, and all the taxes are paid, this is what's left. Over 2,000 crore rupees in profit. This is the bottom line. You can think of this as the company's strong, steady heartbeat. It's really the ultimate measure of how profitable they are. So, how they get from that huge number to this one?
Well, this table shows us that whole journey. You start with the total income at the top. Then, you see the major costs get subtracted out. First, that huge cost of materials, to actually build the vehicles. Then, employee salaries. After all the other expenses, you land on the profit before tax. And finally, the government takes its slice, leaving us with that final profit for the year.
So, we've checked the vitals. Now it's time for a full-body scan. We're moving to the balance sheet. Now, this isn't about performance over time. It's a snapshot. It shows us the company's fundamental structure on one single day, March 31st, 2024.
The balance sheet is built on this really simple, elegant idea. Assets have to equal liabilities plus equity. In plain English, what the company owns has to perfectly balance with what it owes to other people and what the owners themselves have put in. For TVS, you can see that their total assets of just over 16,000 crore rupees, that's stuff like factories, cash, investments, are perfectly balanced by their liabilities and shareholder equity. This perfect balance is a great sign of a stable, solid foundation.
But an annual report isn't just about the numbers. Woven in between all the financial statements is the company's narrative, its story. For example, the report highlights that a TVS factory racer became the first Indian ever to win a class at the Dakar Rally, one of the toughest races on the planet. That little detail tells you so much about the company's culture of performance and innovation, something a balance sheet alone could never, ever capture.
So, after our big checkup, what's the final diagnosis? Let's just quickly summarize what we've learned from reading the charts.
So what do we find? Well,
TVS Motor has a clean bill of health. The auditors confirm the data is reliable. Its vitals are strong, showing it's a profitable and growing business. Its foundational structure is solid, with assets nicely balanced against its obligations. And it's more than just a pile of numbers. It has a really compelling story.
So there you have it. The annual report is now your tool. You know how to check for credibility, how to analyze performance, and how to understand a company's basic structure. The real power here isn't just knowing what these sections mean, but in the questions they make you ask. You could now dive deeper into their investments, their international sales, or how much they spend on R&D. The full story is right there, waiting for you to find it.